Let's also bring on board Avani Bhatt, Senior Vice President at JM Financial. Good morning, Avani. Thank you for joining us here on News9. I want to begin with of course, asking about Nifty and the kind of volatility that we have seen over the past couple of weeks. Essentially, last week, at least a week before that, we were up 500 points in a matter of 2 sessions. We declined about 600 points from there on the whole, January series, historically speaking, has been a down month for us, and that's how it's turning out to be this time around as well.
Good morning, Suyash, and a very good morning to all the viewers as well. So as you rightly pointed out, yes, last week was a very roller coaster ride for all the indices, Nifty, Bank Nifty. For the first 2 days, it made record highs, and then Wednesday we saw a big gap down opening and further correction also. But the very interesting data point that if you look at is India VIX. In spite of such gap openings on both the sides, downside as well as on the upside, and also intraday swings, India VIX has cooled off below 14% at somewhere around 13.8 was the closing on Saturday. So if you look at only India VIX, then this volatility is well within the range, but there is no indication of any major breakdown in the market so far. VIX below 14% is a good sign of stability in the markets. So intraday volatility, also gap openings will be a part and parcel of the markets, but there are no indications of any major breakdown as such going ahead. And if you look at the short-term trading view, then I think 21,700 call is where the highest open interest was for the January series. And today also we are looking at markets hovering somewhere around 21,700. The resistance for this is 21,850 level. I would slightly deviate from the levels that you've given. Yes, technically the retracement level resistance is at 21,800. But if you look at the options chain, it is between 21,800 to 850. And only if we close about 21,850, we would see the upward trajectory continue to retest 22,000 and 22,000 plus levels. But monthly expiry is a big thing, and markets do get impacted a lot on expiry days. So for this expiry, if you look at the aggressive narrow trading range, then it is 21,500 to 21,850 for the January series. Overall, no major indications of any major breakdown. The huge support that comes in is at the recent low of 21,300. If we close below 21,300, then that calls for a breakdown, and we may see downside levels of around 20,950. So as of now, there are no indications. 21,500 to 21,850 is the current working range that we are looking at.
All right, and talking about Nifty Bank, now we have been talking about how it has been struggling with the 48,000 mark. Now we are pretty much about 1,500 points or so below that. But a good bit of a bounce back, in the last couple of sessions. Even this morning, we have opened above the 46,000 mark. 46,500, although remains somewhat elusive, isn't it?
Yes, Suyash. So 46,500 is where the major open interest is for the January series. So immediately it looks difficult that it may cross. In fact, technically the level is around 46,550 to 600 area. That is the area where we may see a second round of sell-off that may set in. Because there are no, although there is shedding happening in the calls on the higher side, minor shedding, but there is no addition in the puts that can confirm the base formation at around 46,000. So there is high probability that we may see a sell-off coming in again at around 46,550 to 600 area. And only if we close above that, there are multiple resistances on the upside. 47,000 would be the next resistance level. So we need to wait and watch. Bank Nifty is still within the range. It's still underperforming. Although Saturday it was an outperforming index, but today it is back to its characteristic of being a laggard. So Bank Nifty will be crucial for any further up move for Nifty also.
All right. And moving on to stocks, over the weekend, we had a lot of big companies coming out with their earnings, and the biggest, of course, being ICICI Bank. Strong set of numbers, but, net interest margin continues to remain under pressure as was expected for the major private banks. But good price movement this morning. It's up somewhere around 3%, in fact, more than 3%, and has also scaled a new record high. So, what are the levels you're tracking on ICICI Bank?
So ICICI Bank has formed a very good base at 960 level, and from there, as long as it remains above 960, there will be an attempt to test 1100 levels on the upside, slowly and gradually. There is shedding seen and 1000 call for the January series, which is like the ATM call as per Saturday's closing. And if we are looking at shedding that happened end of the day basis data, that was a good sign that ICICI Bank results would be good, and that's what we are seeing today. So overall, the upside is up to 1100 that we are targeting, with a small stopover around 1050 to 1060 level, 1060 levels. So this area may pose some hurdle. We may see some cool off coming in around those levels. And then post that it will again resume the upward trajectory towards 1100.
All right, that's the view coming in on ICICI Bank. Zee Entertainment, I want to talk about that. Now, the stock is at a lower circuit, 10% lower circuit this morning. And this was on the back of Sony calling off its merger with the company after working on it for nearly 2 years. What's your take on Zee Entertainment? Is there more pain in the offing?
So let's wait and watch. I think the kind of sellers that we are looking at the lower circuit level, in case once this circuit level opens and we see further downside, we may see probably one more 10% circuit on the downside today itself. 175 to 178 is a very, very crucial support level. And in case the closing is below those levels of 175, then the game is over for the stock. We may see the downfall extend right up to 120 to 125 levels. So as of now, avoid taking any bets on the stock because there's a lot of speculation. It may probably the fallout from the Sony Z merger news has come out. We may see some positive news coming in with respect to merger with some other company, which I don't want to name right now. But so there will be a news flow activity that will keep going on. Avoid the stock as of now. Strictly based on technical levels, 175 is the support level that you should look at. If that is breached, then just get out of the stock because the downside may extend up to 120, 125 levels.
All right, that's the view on Zee. But Avni, before we let you go, any short-term picks in this market?
Yes, see, there's a stock specific activity is pretty good. Even last week, whatever stock recommendations we had given, all four recommendations have hit almost their targets. And so even this week, we've carefully curated a list of 5 stocks that can do good irrespective of where the market goes. My first pick would be NTPC. But one needs to buy these stocks on dips. For NTPC, the level would be 305 to 306, and target would be 322, and stop loss can be kept at 296. The second pick is LNT. LNT can be bought in the range of 3600 to 3610. Targeting 3780 on the upside, and stop loss can be kept at 3525. The third stock that we like from a very short term perspective is Glenmark Pharma, around 875. 915 is the target on the upside, and stop loss can be kept at 847. Fourth stock is from the IT sector, which is Bsoft. Buying range would be 800 to 805, and target is 855, and stop loss can be kept at 767. And last is from the PSU banking space, which looks pretty good and robust. So Bank of Baroda is my favorite pick in this. 228 to 230 is the entry level, and target would be 242. Stop loss is 222.
All right, those are the picks from Avani Bhatt. Ma'am, thank you for joining us here on News 9. Appreciate your time and your thoughts.
Thank you.